Mike, I mentioned that you're saying it's not 1999 out there. What does this, looking back at sort of market history, which I know you're good at, what does this sort of feel like or resemble to you in terms of what the market, the type of market we're in?
Well, so it's a good question. So two thoughts. I mean, right now it's only 3 weeks, but yes, I'm
Right.
sort of encouraged that it's kind of a lockout rally, meaning like, oh, I'll buy such and such on a dip. And then 2 days later it's up another 4%. You're like, well, okay, now I'm gonna wait for it, and then it doesn't pull back. So short term, I'm maybe hoping, I'm definitely hoping, but I'm also wondering if, again, there's just so many people leaning in this direction that we're in that lockout rally. In terms of the bigger picture, it's a little bit like, I mean, I don't trade on this, but it's kind of like the 87, kind of 88 into 89. So 87 was kind of the meltdown crash. Not that we had a crash, but just kind of a bear market.
Right.
And then 88 was kind of this grinding, like, I think at the end of the year, it's like, oh, the market was up whatever percent. But like living through that and really net compared to like the prior, where the top was 2 years ago, it was kind of like, yeah, but nobody feels good about things. And then actually things did kind of kick into gear late in 88. And actually the Fed kept hiking rates in 88, even after the crash, because they realized the economy didn't fall apart. But anyway, they started cutting in 89 and the market had a pretty good, 12-month run or something like that in 89. So it kind of reminds me of that. A lot of the old leaders, old names are working again. That was kind of the same back then. So we'll see, but it's on my mind. I wouldn't say I'm keying off it to a huge degree right now, but that's what I'm thinking.
Now, one thing that Chris and I have talked about a couple of times is looking at China specifically. Had outflows for the first time, net investment outflows last year. Do you guys have any particular feelings on investing in China right now?
Well, I am no China expert, but I can tell you that between the various services, I own three bullish positions in them. So,
And you've had at least one of them for a while now, right?
I've held, yeah,
maybe all three.
I can just tell you the names that I like from that space. I mean, there's actually names that look good. The KWEB, which is the China Internet, basically, well, ETF, we'll just call it. It doesn't look great. It looks okay, but Pinduoduo, I can't pronounce it. Pinduoduo, yeah, PDD. That stock is basically trading at a new 52-week high. Li Auto, LI, is basically within $2 of a all-time high. Baidu, I think, is looking good. So it's not like necessarily the Alibabas. That stock looks terrible. JD looks terrible. But there are some emerging China-related names that look pretty good. And if, God forbid, if that index, that group gets going, I mean, I think PDD, Li, LI, and I think Baidu, I'd have to check. I think has been performing pretty well also. So there are some names. There are definitely, some emerging China names to keep an eye on.
Yeah, when we had Larry Chung on here 3 weeks ago, he was a Chinese investing expert. Pinduoduo was at the top of his list, PDD, and that was before, this big run. So, that's a name that has been sort of on our radar. Sorry, Brad, did you have something?
I was going to bring up the same point. He was highlighting Temu as the PDD marketplace, which offers maybe more of a discount exposure than what Alibaba's got. Plus, Alibaba backtracked on news that they were going to spin out some of their underlying companies as well, and they sold off, I think, close to 10% yesterday on the news. So it certainly makes a case for selectivity.
Yeah, I just look, Baidu's terrible. I was wrong, but PDD and Li look great.
Yeah, EDU looks pretty good too. There's a few out there that look good.
Yeah, and I've been high on BYD just because of their fundamentals, because the numbers, outpacing Tesla. Now the stock's been sort of stubborn. It not bad, but just sort of very marginal gains. I don't know what's going on there, but I still long term like that one. So just to sort of wrap things up, I know you guys don't like looking into your crystal balls. You don't like looking forward or making predictions. I mean, Jacob, you said, 25-30% chance maybe that this falls apart again. I mean, does this feel to you any different from, say, July or the beginning of the year, or other points throughout this year?
Oh God, so I'm gonna get myself in trouble by predicting the future. The options guy is looking about an hour ahead, so I will say the VIX is trading at 13.14, so that's an encouraging sign to me. Now there's a little seasonality. Going back to Brad's question about that, the VIX tends to get low in front of holidays, and we're right in front of Thanksgiving and Christmas and New Year, so trading will slow down. But big picture, it's 13.14. That's encouraging. Option activity is encouraging. I definitely have a growing list of stocks that are on my radar. These stocks that Mike was talking about, they don't pull back. I just keep saying, Duolingo, let's say, I'm like, if this thing can just pull back $5-6, I'm getting in. It doesn't pull back. Stocks like that. Pinterest has not pulled in. So I'm encouraged. There's definitely buyers. The dips are super shallow, but who knows what lurks ahead of us.
Right. Mike?
What he said. I think, I'm optimistic. Like I said, I think you said, is there a difference yet? I think it's to me, it's too soon. It's 3 weeks.
Yeah.
But I would say that one difference is that we just had another 3 month or whatever, 4 months of grinding, down to like grind many more people down to the nub and get people negative. So I think that's positive. And I think if the breadth gets better, again, it's not really my thing. I mean, give me a narrow rally with a bunch of tech like 2020, the pandemic stocks, like, hey, I'll take that every day. But I think if the breadth improves, it's going to do well. So I think if something doesn't, I think all the stuff we know about, assuming rates don't like spike, I think all the stuff we know about in the world, the market's probably comfortable with. The question is, China sells all its treasuries, or something stupid, and the dollar gets hit,
right.
Whatever. I made that up, but I just mean, I think, I'm optimistic that just the sentiment pendulum can kind of swing in the other direction, as long as rates don't, spike, and the market can work its way higher here, possibly powerfully, but maybe it's choppier. But the thing I forgot to mention earlier, I was going to say, is over what I've learned as a trend follower, because I'm sensitive to this, is like the market tends to have periods where it's choppy and breakouts don't wear all this stuff, and then after, eventually it goes to like more of a trending style. We did have a downtrend in 2022, but it was very, it's been 2 or 3 years where things have just been very short term, and they go up for 4 weeks and things die and all that stuff. So I'm pretty optimistic again that like 2024 and beyond, we'll get back to some more trending activity where a stock or a group can go up for more than 4 or 5 weeks without Jacob and all his friends selling it and crushing it and killing our hopes for a sustained rally.
Well, even just looking at the last 2 weeks, looking specifically at the NASDAQ, it's been more of a stair step, right? Where you get a strong rally, lateral move, strong rally, lateral move. That recalling sort of back in the day, the market takes the stairs up and the elevator down, right? Is what I'd always heard. And it certainly feels more constructive where these strong rallies are met with more of an exhale than a reversal of trend. That's my take. I don't know if either of you have any kind of comments.
I totally, it feels so far it's early that after 2 years of Fidelity and T. Rowe Price kind of nibbling and doing some stuff here and there, which maybe Jacob's seen, and the equivalent of like in the big options trades. Yeah, it feels like they're accumulating stuff, meaning like, if the stock starts to pull back a couple bucks, it's like, oh, I'll take 10,000 shares, sort of thing. So it's early, but that's my take on it so far.
Now, if you want to hear more from Mike, Mike will be on a webinar with me and several other Cabot analysts next Tuesday, November 21st at noon Eastern. It's called Mastering Today's Market. 4 experts, 4 top picks, and a wealth of wisdom. That's with Mike, Tyler London, who runs our Cabot Small Cap Confidential Advisory, Tom Hutchinson, who runs our Cabot Income Advisor and Cabot Dividend Investor newsletters, and Bruce Kaiser, our value investor, who runs Cabot Turnaround Letter and Cabot Value Investor. That's noon Eastern time. It's free. You could sign up on the cabotwealth.com website under the free webinars tab. Again, Mastering Today's Market, 4 experts, 4 top picks, and a wealth of wisdom.